Good evening, Ken at Tortoise Capital, nightly strategy podcast for November 16th, 2021. Stick around for the multiple 10-hour wins from the boys today. Well done. Let's see. So let's just get started. Today continues the recovery grind up to test the previous 10-day high and all-time high. There's a lid on it right now, but if it breaks out of here, then it's long and strong and no looking back. The 3-period hull is kind of the path that we would project forward. If it breaks through there, the next resistance is just the mathematical resistance here at 478 based on the the Z2 line, but no resistance overhead. I just want to review how good the that PSAR stop is from all the way back here at the reversal. There's the reversal of the RL10. There's the reversal of the dragon. That makes this the owl. And that PSAR dot has been great the whole way. Even the southern skin of the dragon has been great the whole way. That might have gotten you out. If that got you out, then this 1, 2, 3 exit gets you back in, or 1, 2, 3 entry gets you back in. I also just want to show the power of that 2.5%. So when things are in an uptrend, that 2.5 should be really good. So from the top, that's what a 2.5% sell-off would look like, is the southern skin of the dragon at that point. Because remember, that's what 2.5% looks like. This is what 5% looks like. And this is what 7.5% looks like. And then a 10% would look something like this, just slightly off the chart, right? Like it probably 426. So this little 2.5% has been pretty solid throughout this whole sell-off and then the recovery. I just sort of like I like that PSAR. Nothing wrong with that. I don't even mind the the spine of the dragon, if we're going to be honest here. I don't mind taking that exit and then with a re-entry right here. I could live with that. That would reduce your sell-off to that much instead of coming all the way down, risking that much. And really, if you get out here and yet you get back in right here on the 1, 2, 3, how much did you really give back? Not much, because you're still working with that in hand with a fresh start. And then at that point, you're happy to use the PSAR dot as your risk. So if you get back in here, if you get back in right there and your risk box is down here at the PSAR dot, you don't mind that. You don't mind that at all. And today would have been the day that you get to no lose plus dinner for 2, I would say. You'd probably, if you started off here, you could have committed to following the PSAR up that whole extension, right? But today you might have just elected to go to something like this and just locked in that exit right there. That's not a bad looking trade if you follow this path. So you get the re-entry here. So we're talking about if you had taken that exit, then you get the re-entry here at the 1, 2, 3. Right. And then today on this little surge, that's where I would move my stop from the PSAR. And I would just jump it up to the skin of the dragon and then keep that in place. Then if this thing continued to work, let's just say that it follows if it follows the hull, then tomorrow this might get moved up to here. And then once you can get that just above this all-time previous high, you are really in the money at that point. But what I like about this idea is the, you get this wedge working for you instead of giving it an opportunity to come back and hit your stop and lose money. You just decide, you know what, I'm just gonna make money on this trade. That's what I'm gonna do. You sort of choose. I choose to make money on that trade. So you've locked in that much. And no matter what else happens, that's what you have. And then if it breaks above that previous 10-day high, you can add a second position up in here. So now, if it breaks above this green line, and you could even argue if it breaks above the RL10, like I wouldn't be offended if you decided to get long tomorrow, like right there, if it takes out today, essentially, if it takes out today's high. Get a second position here or at that solid green line, you're in good shape either way. And then your next job would be to figure out how could I move that to no lose plus dinner for 2 on the second position. And then once you have that, you're good to go. All right, let me know if you found that helpful in chat. Okay, so let's take a look at today. In the sectors, the S&P was up 0.4. The Qs were up 0.71. The Dow and the Russell were both up 0.18, 0.19. Emerging markets up 0.14. So the 5 indexes were good. Treasuries gave back a quarter, so they're still above 145, but they gave back 0.25%. So the only things better today than the S&P in the sectors were biotech up 0.5, FANGs 0.7, tech and ARC innovation up 1.05 and 1.2. Consumer discretionary 1.6. ARC genomics up 2%. Big winners, Tesla coming back now with 4%. That's a big contributor to the gains in consumer discretionary because that's like 20% of XLY. Squarespace 2.3, PayPal 1.5, Microsoft 1%, Apple 0.67. So Microsoft is still kind of showing the strength. Underperformers. So again, you have the S&P at 0.4. Going to drop down here to this cluster of clean energy, agriculture, lumber, finance, moonshots, and blended commodities between 0.08 and minus 0.14. And then worse than treasuries, it was basic materials, 0.28, oil exploration, consumer discretionary, lithium, Simon Property Group, 0.85, wheat and precious in Mexico, 1%, Let's see, Brazil 2.4, marijuana 2.5, blockchain 2.5, Robinhood 3%. The whole crypto complex got smashed today. The blended large caps down 6%, Bitcoin futures 6.5%, 8% in the Bitcoin Trust, 8.5% in Ethereum. Another big down day in the metals. So there's Alcoa off 5%, TX, the steel company, U.S. Steel, and Cliff Natural Resources all down more than 1.2 to 1.7%. So we talked about that yesterday. Was a big down day in the metals. And so we said, today could have been a nice rebound or a continuation. So we get the big continuation down play again. And we'll see that, I think, in Luke's trade. So that's the look at the sectors. It just doesn't get any better than this one. This is Bill Scheit's PSAR flip in the currencies. In this case, he's using Ethereum on a swing trade, and nothing more than SSCs and PSAR flips. Basically, PSAR flip. Ooh. Sorry, my mouse got hooked up on me there. Okay, so here's the PSAR flip system. Here's another 1.2 in Ethereum. And he's just using dailies. And he noticed, this little PSAR flip for the downside. Here's the RL10 bottoms out. There's the PSAR flip. He buys it in here. Uses the PSAR in the bottom of the RL10, a nice wide stop. I'm of the opinion you can do this and keep that in place. So now I think your risk could be this instead of all the way down here. So you would get a slightly bigger position size if you use stop B instead of stop A, but then keep that stop in play until the PSAR picks up, and then just pick up his PSAR exit. That wouldn't, and then you take that exit there. And that's all he's doing. PSAR entry. Notice it holds support above the dragon and above the Bollinger Band mean. Here's the Bollinger Band mean. Acting like that's the manager's exit. Bill is using the PSAR dots as the sniper exit. This was really close yesterday. But here's where a continuation pattern might be. You see this little ride and then a recovery, and it takes out this. Or this, or this. The argument for one of these two is the Z3 line is taken out. And here's that's the first place that the RL10 crosses. So, yeah. And now you get, enters the dragon, crosses the spine, leaves the dragon, almost hits the PSAR. But today, the price went through the PSAR, so he takes that exit. So 1.2. He's got a real nice briefing set up in the research weekend. It's got good stuff on that. He does good work. Let's see, what was I going to show? Oh, let's take a look at the, Bill marks up the, he likes seeing the the seasons. So you don't always see that when you are color coding the RL10 like I do so that I get more screen space. Sometimes you miss the flow of fall. Now here's where it goes into the winter because it goes below the 0 line. So that's where it picks up the winter, bottom of the winter. So the bottoming of the RL10 precedes the bottoming of the winter by a couple days. And then the winter becomes spring, which coincides nicely with the last of the PSAR dots and the PSAR flip. And now you have the spring. There's the summer where it crosses the 0 line. And that's why I kind of like this. I like that because now you are well into the summer and you're leaving that Red River. Remember, so the Red River is at plus or minus 1 standard deviation around the Bollinger Band mean on the MACD line, right? And so this starts telling you, exceptional move coming. So now, as this thing is getting stronger and stronger, now here's where that summer rolls over and becomes fall, right where that crosses the baby dragon. And it crosses over outside of that red dragon, the Red River. Not red dragon, Red River. And so this might have been a warning here to get out. That's a 1, 2, 3 exit, which saves you maybe 0.5 R. So if you were ever going to use a discretionary stop, that might have been the place. So there is an advantage of a visual advantage of using this MACD 4 seasons here. It's a little easier to see maybe. I like looking at I like having more screen space on the price action. So by getting rid of that, getting rid of this, I can expand the size of the price. And I get to see that information on the RL10 when we color code that. So it's just a choice style. All right, here is, let's see what we got on this one. This is on EWZ. So here was a pinch, big gap down. So he takes it at the new low of the day, and it ticks him out for -1. This is your reentry. It rebounds. It doesn't even get through the dragon, but immediately starts failing and makes a new low of the day. There's your entry short. But this is a good entry here though, but you actually get a little better one if you get right there. Like a 1, 2, 3 exit. That's nice. I like the collapsing dragon short. It doesn't work. So he takes the stop at the PSAR. I might have tried this one again or this one, and either one of those would have paid off. Here is notice how calm this has become. It has failed to fail further. And notice you got the Z3 lines are pinching. That makes this one, and you probably end up taking that exit, but you get paid on this one as an SSC. And then probably re-enter. And maybe you get paid here, or that's probably a scratch. So this one was a scratch. Nothing wrong with that. That's fine. Now, notice the Z3 pinch and super pinch. This is the one you got to get. So we have this long sideways quiet channel that gave us a scratch, right? So you got all this crap here. That causes the Z3 lines to pinch. And right here, notice how that goes from red to yellow. That's telling you this is an abnormal pinch, the way he's got this set up. So now you have fall, winter, spring, summer. There's your entry. There's your piece. You could even enter here with a PSAR flip, but that's your risk. And if that one shouldn't get you out, but he ends up getting in right here on the recovery. But that gives you another full R. And so instead of 0.5, and this box is a little smaller than that box, that would give you probably 1.5. And that's a great exit. This is a good shot on the downside. I might have taken the 1, 2, 3 exit here. So not much. And then here's your or here, either here or here, there's a PSAR flip. And again, you got the pinch. Now the breakdown from the pinch gives you this trade. There's an SSC here. There's another PSAR flip. It gives you that trade. And then instead of losing 0.2, you earn that much on a risk of about that much. So that might even have gotten you +2. That's the one we want right here. That's the super pinch. Let me go back to that again. Oh, I already closed it out. Sorry. All right, here is laser LAZR. Yesterday's pinch box, big gap down, 1, 2, 3 short, because why not? Second position, 1, 2, 3 exit would have been here. This exit is pretty darn good. Here's a good stop and reverse, taking what's available. And that's especially good because after this kind of a loss, you don't think that it's going to just keep going like that. So you get what was there. But conversely, that makes this a good short, and that makes this an even better short because this is a supported winter crossing. Notice how this goes: spring, summer, fall, winter. Oh, bang. And now instead of minus 0.3, you're short here with a risk box right there. So this is, even if we just take this, the bottom of the RL10, and now you have a 1, 2, 3. You could even get short there, but let's just take that one as the collapsing dragon with a risk box at the PSAR. So that's your risk. So you get 1, 2. At the most favorable, it was 3. And then if you take that exit, you're getting plus 1.5 instead of minus 0.3. But now this one is a beautiful SSC because you have the harsh sell-off. It held twice at this level, 1, 2, 3, hit it. I might have taken this, but you got what was available. Here's a super pinch. It's hard to get a tighter super pinch than this. So maybe there's a Z3 breakout, but you probably would have scratched this. But then here's the next one because you have a COTA 2. And there's your risk box. So now instead of getting here with an exit here, that entry pays off. And then following up with another kata 2, because now you have a low, a higher low. There's your next kata 2. And that was a reasonable effort on the short side. So, but all told, I mean, we don't mind 9.5 R for that. It's pretty good work. Pretty good day at work. Here's CLF. His last 100 trades, winning 0.58, losing 0.42, including scratches. So that's almost 0.6 to 0.4 and paying 3 to 2. The coin flip better than 50% paying 3 to 2. Two minutes. That's going to be in his research paper, his research weekend paper, for those of you considering whether or not to take that. I'm telling you, best thing in the world for you is to trade in public. Skin in the game. Doesn't take this one. Oh, gosh. Oh. So you finally talked yourself into taking the short, and then this would be your 1, 2, 3 exit instead of here. At least you got back on the right side of that. And now, after 5, 6 bars down here, you gave back 3/4 of the gain, but you didn't lose money on it. You waited for this to give it a try. That's a reasonable shot. That's a reasonable short. And now you got the Z3 pinch, just like you're supposed to, just short of the VWAP. Second position when it takes out the Z3 pinch and the RL270. Possible third position. So Z3 pinch gets short just before it crosses the VWAP. Second position, possible third position, manager's exit 4.5. Another 1.5 in the afternoon. Yeah, the quicker you scratch a trade, the quicker you can get to zero state again. Yeah, this just might reduce your overall loss percentage while also being able to reduce your MMRB on the other entry, get a better execution price. You're exactly right. You're exactly right, dude. Crushing it. So there's 5R. Nice. Here's some Bitcoin. Big gap down. That was like a 8% sell-off. 1, 2, 3. Gets a bad fill. Scratch. Re-enter. Makes 0.8. Just take what's there, dude. Don't lose money. Take what's there. So that's 0.8. Waits for the thing to settle down. Gets the super pinch. Crushes it. Could it have added a second position there? takes the managerial exit for 3.5. So now he's at 4.3. So that ain't too shabby. The afternoon trade's the one you want to see, though. Holy mackerel. Yeah, that whole afternoon sell-off was just freaking brutal. Every time it hit that, every time it hit the VWAP and got smashed. And Ethereum, oh, super pinch. And smashed. 6% sell-off in 30 minutes. Ooh. There'd be fireworks in that one tomorrow. Really good work, fellas. All right, so still bullish normal and overbought most of the way, and really good on the 2-day, above average, staying overbought. Europe giving a signal on channeling that it's ready to join the play. Risk Z is still giving us cautiously optimistic to the upside. Microsoft, Home Depot, Chevron, Procter, and Diamonds. Weakness in the metals still. Nucor, Alcoa. Metals and mining. Dow Tactical Summary, handful of dojis, plenty of goodies. There's 10-1 in Disney. A 5DD in JP Morgan. Nice. Tactical Summary, just 4 little dojis, a couple auto framers that test out well. Asia less Japan, and treasuries are setting up for a rebound, holding support at 145. Standard framing data, I'll leave that to you to work. Disney, Merck, and treasuries look the best to me. Diamonds at 1.8 to 1. The Russell at 1.6. And Disney at 10-1 is still a 2.2 on a squeeze. So I think watch Disney there, Ken H. That has possibilities. Chevron, Microsoft, Home Depot. Tech, big winner today. S&P, a big winner today. The other tech. And that's part that 233 is coming from Tesla and Home Depot, both doing very well. Because Home Depot is also, we're 10% of XLY. So Home Depot and Tesla in the same ticker. Boy, that's not bad. Holding up well, but it's got to get above this 4.7. Now we are testing 470. And now we're going to see if it has more legs. So it's crossed over. This is now the critical state. It's had a nice little rebound. Now, is it going to break out of that to the upside, in which case it looks like this, or is it going to break to the downside and look like that? Critical state in the S&P, pushing all-time highs. So those are warnings, but that could also just be leg one. And you get another nice move up. This is already, when you look at the last 10 years, this last 30 days has been pretty darn good. It's the third best 30-day period in the last 10 years. So caution. Volatility strictly low. So there we are. Pushing to the highs. And the slope of the RL90 starting to recover. Still some legs on this thing. It's not old yet. So let's be ready for tomorrow. Let's take good care and be ready for the critical state tomorrow. Crypto's going to rock tomorrow.